As always, Christina Campmelly there of Invesco with the latest. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John, good morning to you. This is your Bloomberg Brief. Israel will start negotiations on the second phase of the ceasefire with Hamas as early as this week. Israel's foreign affairs minister said discussions to extend the initial 6-week truce will start in the coming days. Israel's goal is to ensure the release of all hostages and remove Hamas as a governing and military force in Gaza. Uber-backed Lime posted record trips in 2024, posting over 30% growth in gross bookings. The shared e-bike and scooter network pledged to sustain the double-digit growth. It also plans to follow through on a long-expected IPO, but did not provide a timeline. Elsewhere, New York Governor Kathy Hochul is set to meet with leaders today to discuss a path forward for Mayor Eric Adams after serious allegations of quid pro quo with President Trump. This after the DOJ called on Manhattan prosecutors to drop their pending bribery case against Adams, sparking concern that he is beholden to the president. And that's your brief. John.
Danny, thank you. Thanks for this morning. Appreciate it. If you are just joining us after the long weekend, welcome back. Equity futures are advancing by 0.4% on the S&P 500 after snapping a 2-week losing streak just last week. The Nasdaq was absolutely flying last week, the best week of the year so far in 2025, up by 0.5%. We mentioned briefly developments in the bond market last week. Yields down on a 10-year maturity for 5 consecutive weeks. This morning, yields up by 4 basis points. The 10-year 451.32. This week, some economic data on Friday. We get some PMIs. On Thursday morning, jobless claims. Lots of questions already to start the week. Will we see some disruption in the data following the layoffs in the nation's capital? We'll get you the view on that in just a moment. We'll catch up with Tyler Kendall from Washington, D.C. On the other side, from New York City, this is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI to decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The opening bell about 40 minutes away, with equity futures positive by 0.4%. As we count you down, let's give you a flavour of the week ahead, a snapshot of things. A little bit later this afternoon at 4 p.m, President Trump signing another round of executive orders. Tomorrow, some data, housing starts, and some Fed minutes as well. Look out for that in the afternoon. Thursday, Walmart earnings plus another round of jobless claims, which are becoming a big focal point for this market early in the week. And then on Friday, US PMIs and UMich consumer sentiment. Looking ahead to the week ahead and looking back to the last few hours and what's happened in Riyadh, Saudi Arabia. Joining us now is Bloomberg's Tyler Kendall in Washington, D.C. Tyler, welcome back. Let's put it all together. Lots of headlines in the last 60 minutes or so. Just what took place in Riyadh?
Well, John, we know that as of now, there is no official date on the books for a potential U.S.-Russia leader summit, something that we know officials were hoping to get pinned down by the end of the month. Secretary of State Marco Rubio gave a readout afterwards where he said, importantly, that high-level discussions will continue, that a specific team will be appointed, sort of indicating that this would be progressing into the next phase. He also indicated that the European Union will be involved in these discussions, which does come after, of course, we've heard criticism by European leaders as well as Ukraine that they haven't had a seat at the table during this reversal of U.S. policy with direct coordination with Russia. We know that Ukraine had asked just yesterday that a top-level, leader-level envoy from Europe be appointed as these peace talks continue. Another thing that struck me from the readout that we got from the State Department spokesperson is that she said that during these discussions, they discussed a, quote, mutual geopolitical interest and historic economic and investment opportunities that will emerge from a successful end to the conflict in Ukraine. Of course, we've been watching this idea of economic cooperation along with foreign policy here, particularly as the U.S. floats to Ukraine a potential economic cooperation agreement that could see the U.S. accessing critical minerals in the country. And we know President Trump is set to is interested in attending a Saudi-backed investment conference later this week. So a bunch of themes that we're watching here as we continue to get these developments out of Saudi Arabia.
Yeah, it seems like Trump 2.0, like Trump 1.0, is going to have close ties with the kingdom. Trump is going to speak at this FII event in Miami. Tyler, do you know what potentially he may say at this meeting when it comes to these kind of investments?
Right. Well, Amaru, we've heard President Trump previously call for up to $1 trillion in foreign direct investment from Saudi Arabia in the U.S. So that could be a potential point here as he tries to strengthen ties between the two nations. As you've pointed out before, President Trump's first foreign trip of his first administration was to Saudi Arabia. We're also watching closely when it comes to oil output. We know that OPEC signaled earlier that they might not be restarting their April supply that was set to restart, even as a push from President Trump comes for them to restart that supply in a bid to try to lower energy prices. So that's another theme that could emerge as well as these talks continue and President Trump push forwards with a potential leader summit as these officials try to get a date on the books.
Well, when it comes to that leader summit, he wanted it by the end of the month. Tyler, how quickly do you think, based off reading the Russian and the U.S. readout, we could actually see that happen?
Anne-Marie, it just remains to be seen. But if these past 4 weeks, of course, yesterday marked exactly 4 weeks since President Trump has been in office, things are moving at a pretty rapid pace. We know that Secretary of State Marco Rubio was there, as well as Envoy Steve Witkoff and also National Security Advisor Michael Waltz. This is the team that is really trying to push forward these negotiations. So we'll have to see how that timeline ultimately comes together. But as you know, Anne-Marie, this is something that President Trump campaigned heavily on, trying to end the war in Ukraine. This is going to be one of those promises that he's trying to make good on. But of course, there are a lot of other mitigating factors here, particularly as Trump also tries to pivot and turn this into a domestic issue for American voters, saying that he's trying to focus on helping to bring investment to the U.S. As he tries to pivot the corner here.
Hey, Tyler, appreciate it. Looking forward to your coverage throughout today from the nation's capital in Washington, D.C. Bloomberg's Tyler Kendall there. It's all relative, of course, but things pretty quiet so far, right?
Well, yeah. I mean, it's going to be in terms of what investors care about. And I was just thinking, this whole morning, it seems like the policy model that we've gotten over the past few weeks has left investors feeling like they don't have to really count it. And so they're going to look more at the potential growth hit, which is giving some sort of suppression to yields, which is giving people more optimism about a soft landing, which is why people are all in. As a Bank of America fund manager survey shows, it is hard to pay attention to a lot of noise. And right now, it feels very noisy.
But the fact that you are having these high-level discussions, I think investors view that as a positive. There are two hot wars right now in the world, and potentially one of them could end at a peace negotiating table, and this would be the first step to that. Although the track seems to be very different, how quickly Putin wants to move and how quickly Trump wants to move.
Over the past month or so, European stocks are up, not down, for plenty of reasons, and I think that's one of the reasons. Over the past few weeks, at least, that's for sure. Next tomorrow, we'll be catching up with Alicia Levine of BNY Wealth, Jennifer Flitton of Invesco, Oliver Chen of TD Cowen, and Matt Lazzetti of Deutsche Bank. From New York City this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like this, the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
All right, good Tuesday morning. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the U.S. and Russia agree to more talks on resolving the war in Ukraine, but they set no date for a summit meeting between Donald Trump and Vladimir Putin.
Legacy tech is back. Cisco, IBM, and Oracle are outperforming this year, showing old school tech names can be AI winners as well.
Plus, Big Pharma heads to the White House. CVS Health executive Prem Shah joins the show as the company pushes back on critics in the fight to lower drug prices. All that and more coming up. Let's take a look at where markets are trading right now in this holiday shortened week. You can see a little bit of a lift following on that momentum that we picked up on the big indexes last week. The S&P 500 higher by about 0.4%. Same story too if you take a look at big tech, with the Nasdaq 100 higher by 0.5% pre-market. Can't say the same about the bond market. We're seeing a sell-off there. 10-year Treasury yields higher by about 4 basis points, back above 4.5%. Matt Miller, it doesn't feel like it, but actually Treasury yields have been falling for 5 weeks straight on the long end. Maybe we'll see a reversal this week.
Yeah, we're still just slightly in the danger zone there.
Slightly.
At 451.
Slight danger.
I'm showing a chart here of the outperformance of other indexes over the S&P 500. S&P here, total return in yellow. I show it in total return because that's how the DAX is calculated. You can see the DAX here in white. The German benchmark index, this is year to date, outperforming the DAX. Here in the middle, you see the Stock 600 for a broader look at how European stocks are doing. But this is just one more sign that investors are willing to take risk outside of the U.S. Maybe that the idea of U.S. exceptionalism is dying down a little bit.
Yeah, maybe we hit peak U.S. exceptionalism. We will see. Looking also at some stocks under the hood here that are moving. We're looking at Intel. This has been a mover for really some time now, but up more than 4.7% pre-market, gaining this morning. The stock had its best week since the 1980s. Last week, extending gains now. Remember, there's also a report that TSMC and Broadcom are looking into deals that would bring U.S. chip-making giant. It would break it in two based on the deals it would have with both of those companies. Also looking at Constellation Brands here, a 5.6% pre-market. They are surging. It was 13F season. Berkshire Hathaway reported a new stake in the beer giant. And H&E Equipment Services, we're looking at deals as well, up more than 13, almost 14% pre-market. They have accepted a bid from Herc Rentals, which values the group at almost $5.3 billion, according to the Financial Times.
All right, so a lot going on in the stock market this morning. There was a great survey out by Bank America showing that investors are piling into global stocks. Cash levels are the lowest they've been since 2010. But I thought, Katie, very interesting, 89% of the respondents in the survey said that U.S. equities are overvalued now.
Yeah, and it matches really well with that chart that you just showed, that somehow Europe is outperforming the U.S. year to date. And I say somehow because you think about the story coming from Davos. It was about all these depressed Europeans. We have all of this geopolitical strife when it comes to Europe right now. But apparently the U.S.'s rich valuations are something to be scared of.
It's interesting. You have that Bank of America survey saying that investors are long stocks and short everything else. But then you look at where they're buying, it is pretty defensive. It follows that kind of short trade in a different way. Gold, in particular, that Goldman note this morning, for example, saying that you could have gold hitting $3,300. The reason that's interesting is starting last year, it was below 2,000. So incredible rise already. They expect more to come. And part of that, Katie, is because of all that buying into ETFs.
Well, speaking about interesting Goldman notes, did you see also that they're raising their MSCI China target on the DeepSeek news? They're expecting a 16% rise in Chinese equities over the next 12 months. It's been a while since we've talked to a China bull on this show.
Yeah, absolutely. By the way, I think the Goldman target is 3,100.
As much as 33, though. The target is 31, but they can go into 33.
I see, in a best case
they've
scenario.
They've got a base case, they've got a bull case.
Or a worst case scenario. All right, let's get into the geopolitical story.
That's, of course, some of the reason why people are looking for haven bids. Remember, top U.S. and Russian officials have met in Saudi Arabia to discuss ending the war in Ukraine, but without Ukraine's participation. And Bloomberg's Oliver Crook is covering this for us. Plus, I've been watching, Oliver, you've been covering global news kind of really across Europe right now, a lot going on at the same time. But let's stick with what's happening in regard to Ukraine. How does the matter evolve from here, particularly as the tensions keep brewing between the involvement of Ukraine's discussions with the U.S. and Russia?
Yeah, so listen, I think that there was a sort of very truncated timeline that just sort of suddenly appeared out of the clear blue sky last week, where we basically understood that the Trump administration was seeking to actively meet with President Putin after the phone call that they held last week. And the beginnings of those sort of preparations for that conversation of a sort of one-on-one in-person meeting began this week in Saudi Arabia. We had Marco Rubio, we had Mike Waltz, we had Steve Witkoff, all there. You can see them around the tables, sitting across from Sergei Lavrov, the foreign minister of Russia. This is a sort of concept that probably a couple of weeks ago was more or less inconceivable, and is a sort of concept that is still fairly inconceivable to many of the European leaders here who are observing this, and they're observing it from a distance, not really involved in any of these conversations. However, after that meeting concluded, we had heard going into this meeting that Trump was potentially hoping to meet Putin as early as next week. We understand that that timeline may not be really very accurate, and that it seems, from what we've heard from Russian media on the sort of on the back of that meeting, that it probably is not going to happen next week. But again, this is a fast-moving question, a fast-moving story. Of course, the Ukrainians were not involved. I think for the Trump administration, this is just really a fact-finding mission to see how strong the cards that they hold are at the moment.
Yeah, a lot of moving parts here, like you say. You raised two interesting points. One, that, of course, Volodymyr Zelensky has warned that his country won't recognize any agreements about us without us. So that, of course, is a hurdle there. But I want to talk about the U.S.-Russia relationship and whether they were on the same page when it comes to the goals of this meeting, because it seems like the U.S. side was trying to start negotiations here about an end to the war in Ukraine, whereas sort of the message coming from Russia was that this was just about normalizing relations with the U.S.
Yeah, and it's felt a lot like the Trump administration has wanted to sort of dictate the cadence of what this discussion would be like. And again, what we got from the sort of Russian side is that perhaps not so fast. Maybe that's not exactly how it's going to go. So again, I think we're going to have to leave a little bit of time to digest what each side really heard from the table. But we need to imagine, in kind of the mind of Donald Trump and the mind of Vladimir Putin, what each of them sort of hopes to extract from this meeting. As sort of upset and as sort of concerned as the Europeans have been that the Trump administration has sort of moved on without them into beginning these conversations, the real question is, I mean, everybody wants a good deal here, right? And what that means for Russia and what that means for the United States, we still don't really know. Obviously, the Russians want to hold on to some of the territorial gains they've made in Ukraine, but really the one thing they want is Ukraine to be sort of guaranteed to never join NATO. These are all of the chips that are on the table right now, and frankly, the reality of the situation is we don't really know what the U.S. administration wants from Russia. We start to have an idea of what they want from the Europeans. They want the Europeans to step up their role in terms of security guarantees, maybe deploying troops into Ukraine in order to have a peacekeeping mission there after any kind of talks. But those are the kind of state of play going into this conversation.
Yeah, it'll be interesting to see how many of those peacekeeping troops are actually European boots on the ground, specifically German boots on the ground. Oliver, great coverage there out of Berlin. Oliver Crook covering this for us. Let's get to the market side of it. BMO Private Wealth Chief Market Strategist Carol Schleif joins us now. And Carol, clearly we've seen the rise in defense stocks both in Europe here in the U.S. But I think it's interesting as we see kind of a peaking of optimism in terms of stock market investors that people are favoring European assets over American ones. How do you think about that?
I think a piece of it is that there is the relative valuations, and when you look at it at a short-term standpoint in terms of year-to-date versus it neutralizes some in terms of how badly a lot of the global markets underperformed in the last couple of years. But you're seeing people want to keep that growth stance, if you will, and watching the rest of the globe, not other surveys out assuming that people don't see necessarily pullbacks in the rest of the globe, that there's reasonable growth. And in the U.S., companies in particular, as well as investors, are grappling in the very short term with how do we get clarity around the tariff issues, who, what, where, how much. We've got some key dates coming up with March 4th, March 12th, April 1st. But once we get beyond that, we do think investors stay on that foot forward, if you will, and that the U.S. economy is still in pretty reasonable shape, but we're paying pretty dearly for it.
Speaking of paying pretty dearly, another thing that caught my eye about this Bank of America survey this morning that we were talking about was that fund managers' cash levels fell to the lowest levels since 2010. We talk about this all the time, all the cash on the sidelines as it pertains to retail investors, particularly when you still have higher interest rates, cash can still pay. But if you have fund managers where cash is harder to come by, then how much is this market really depending on that marginal retail buyer?
Well, there is that piece of it, but you've also got a philosophy. There's the ongoing debate, if you will, among professional money managers. And there are a lot of them that feel like their job is not to hold cash for clients. Clients will hold the cash that they want to hold outside of what the professional money managers do, and that professional money managers are paid to be fully invested. So they're looking around the globe for those areas that might not have participated as strongly coming into this. So there's a lot of hunt. It was pretty interesting last year because Chinese markets did well, actually, and surprised a lot of people with the strength towards the end of last year. You've got great growth numbers coming out of Japan in the last week or so in terms of the economy and inflation coming back to reasonable levels. So it is a pretty interesting global mix.
Yeah, it's a great point, too, on money market funds, because it's not the job of these professional managers to hold cash. That's what their clients are doing. And you can see that in money market funds, still at $7 trillion thereabouts. But let's go back to China. We were just chatting about that Goldman note, basically upping its target on Chinese equities, thinking that this DeepSeek news from a few weeks ago, it's not just a flash in the pan. Talk us through your base case, though, when it comes to China.
I think the other thing to think about, too, and one of the things we've been migrating towards in China is that our house view has been leaning towards China in that, assuming that President Trump was wanting to cut a deal with China relative to tariffs, because there were a lot of things on the campaign trail thrown out there, but he's also expressed a lot of appreciation for Chairman Xi and what's gone on over there. And so we suspect that a lot of the verbiage that you've seen out there is positioning for a trade deal. And if you get some kind of deal relative to tariffs so that people know what the playing field is, then companies can adjust, then people can move on. And so we do think there's a lot more opportunity in Southeast Asia, if you will, just based on, you do need to see some supply chains rearranged, but that's happening, and we suspect that there's so much pessimism in some of those markets, and it bears over into the developed markets in Europe as well, that there's so much pessimism in those markets that hopefully there's some room from a valuation standpoint.
All right, Carol, thanks so much for joining us on such a news-packed day. BMO's Chief Market Strategist for BMO Wealth, Carol Schleif there. Coming up, old school tech names are making a comeback in 2025. We'll take a closer look at the AI race next and how it needs old economy companies as well to help build the infrastructure. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race and Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
What does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Let's get out of high interest to look at what's making headlines around the world. A report from the Financial Times overnight says the Japanese auto giant Honda is willing to resume takeover talks with Nissan if the company's CEO steps down. The report says that Honda would be prepared to revive negotiations under a new boss who can better manage internal opposition. And Delta Airlines, a plane from the airline flipped upside down while landing in windy conditions in Toronto yesterday. The plane, which was flying from Minneapolis-St. Paul, had 80 people on board, 15 were injured, 3 critically in the accidents, the latest in a series of plane crashes so far this year, including the deadly crash in the Potomac River late last month. And here in New York, Governor Kathy Hochul is signaling she may use her authority to remove New York City Mayor Eric Adams from office. Hochul is calling a meeting today with key leaders to discuss a path forward. 4 top officials in the Adams administration resigned following the fallout over the Justice Department's decision to dismiss corruption charges against Mayor Adams, and those are just the latest in a longer line of resignations. Katie?
Yeah, we'll continue to follow that story closely. But switching gears here, score one for the boomers. Legacy tech names like Cisco, IBM, and Oracle drawing renewed attention in the AI tech race. Bloomberg's Ryan Vlastelica wrote the story. He's here with more from Chicago. We were talking about how surprising it is to see Europe outperforming the U.S. year to date on valuation concerns. More surprising maybe is the fact that you have Cisco, IBM up double digits so far in 2025. What is going on here, Ryan?
Hey, good morning. Thanks for having me. So a few things going on here. It seems like after an extended period where these companies were seeing sort of lower, slower growth trends, they're starting to participate in the AI trade in a more concerted fashion. We saw this with Cisco last week. Pretty strong forecast there. It is starting to participate from all of the buildings surrounding AI infrastructure. IBM, its software business, its cloud business, that is also seeing renewed demand. That's helping lift growth up. It's not quite as strong as you're seeing among the more familiar names that we talk about within big tech, but it's starting to pick up a little bit. And the fact that these stocks were beaten down for a pretty long period of time, pretty cheap relative to the other names within big tech, dividend yields, so on and so forth, that's helping attract a little bit more of a renewed attention so far this year.
Well, one thing you point out in your story also, that the idea that they trade at only 17 times earnings for Cisco, much less, for example, than the Mag 7 over 30 times. Do you think that there's a lot of room here for expansion, to look closer to the Magnificent 7 if they're really going to benefit in these serious ways from AI? Really, how much room is there to run?
Well, I'd say for Cisco's example, the growth expectations there are not nearly as strong as you see at Microsoft or Amazon or Nvidia, so on and so forth. So probably doesn't have the room to get to that kind of multiple there. But certainly it is lower now, and the growth is starting to accelerate just a little bit. So certainly some positive trends there.
I wonder about Intel. Okay, it's not necessarily one of these old economy companies, although it feels like it to me.
An American icon, if you will.
It is an American icon.
Thank you.
Let's face it, it's old school, right? That's been the problem with Intel. However, Ryan, we've got reports now that Broadcom and Taiwan Semiconductor are considering different plans. Is it back in play, Intel? Is there a possibility this company gets bought or broken up?
It seems like such an increasing kind of outcome here. Obviously, the CEO was removed, I think in December. He was someone who was really forcibly trying to keep the company's initial plan of having both a foundry business and a chip design business intact. He was very, investing a lot in a turnaround. It seems like they were really struggling with that turnaround, spending a lot of money, having sort of less to show for it, especially in the AI age. So it does seem like there is increased interest right now in, some kind of outcome where either the company is split up or acquired. We really don't know right now. It's pretty up in the air at the moment, it seems like.
Yeah, speaking of up in the air, it's interesting, guys. You looked at Bloomberg Intelligence research. If they do get away with this investment, you have TSMC risking profitability on a lot of metrics also. So even for the other companies, there's kind of a lot to sort out in terms of how capital intensive this might be.
Yeah, it's a gamble on both ends. It really feels like this market, this trade wants to see something happen with Intel, whether it's a breakup, whether it's a deal. We'll have to continue that. But Ryan, I want to talk a little bit more about this broader theme, that you do have these older, more mature companies now getting in on the AI trade, feeling some of that enthusiasm. Do the fundamentals match up with that, or is this more a valuation game, just looking at what is undervalued right now relative to, of course, the Magnificent Seven?
Well, I'd say a year ago, people really weren't paying much attention to IBM or Cisco, kind of in general. I mean, occasionally they would benefit as in sort of these temporary sort of value trades or dividend trades. But I would say right now we are seeing a little bit more, of a growth narrative surrounding AI, which is helping these stocks. It's not, again, not as strong as you're seeing at some of the Mag 7 stocks, but again, the valuations aren't as strong, so it's allowing them to play catch up in a little bit.
Yeah, it's allowing them to take advantage of a place where maybe they've lost a step, right? I think of IBM, and they continually try and innovate in the AI world, even before it was a hot term, when they were beating human contestants on Jeopardy. Do they have a chance at doing something better? Do people really see their products or their software as innovative?
I think you're seeing that to a certain degree. I don't think anyone is really viewing them as sort of the cutting edge in the same way you might, the OpenAIs of the world or some of those, larger players here. But the fact that they are starting to see some improved growth, some improved cloud trends, some improved networking demand, all those kinds of things, especially off of a lower level, has people taking a look. Maybe some of the bigger Mag 7 stocks have already, gone a few innings in their AI story. Maybe the IBM or the Ciscos of the world, maybe they're more in their first inning or so. That allows you to sort of get in on a lower floor. Might be the theme here.
Ryan Veselica, thank you so much for your time and for your reporting. Of course, fascinating read this morning and very fun time looking at these stocks.
Yeah, absolutely. Also, IBM, I just find it really charming that the name is International Business Machines. Nothing screams more to me that this is an older company from the 60s than the name International Business Machines.
They need a hotter name, like a fruit or something.
They got to get AI in there.
I know a guy who works at IBM up in Armonk in machine learning.
There you go.
So that is,
They do machines, international.
Well, machine learning is AI, right?
Oracle this is kind of futuristic.
Yeah, that's true. That's a flashy name.
Yes, and of course, Larry Ellison hanging out with President Trump and Sam Altman at the White House doesn't hurt things at all. We're going to continue to discuss this AI trade and more with RBC's Lori Calvasina. We'll talk to her as well about the Bank of America survey showing global stocks are favored and investors are willing to take more risk than they have in the last 15 years. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immense.